JPMorgan in its report is saying that the consumer demand has been relatively weak, and this was hurt by the rising prices and a poor jobs data. But now both these factors are turning favorable, and on the back of this, they are advising investors to prefer consumer staples and two-wheelers auto. Now they have divided the consumption basket into four categories. Firstly is the consumption staples, where they are saying that they were seeing poor volume outcomes on that front when it comes to autos, especially two-wheelers. The volumes were just below or had just the pre-pandemic levels currently. And then it comes to mass discretionary categories such as apparels, durables and footwear, and then there is higher end discretionary categories such as jewelry. Now the last segment, that is the high end discretionary, that is not exposed to the consumer confidence. The stocks in mass discretionary category, now they have corrected a bit from their peak, but the valuations continue to remain at elevated levels, and thus it leaves us with only two segments, that is consumer staples and two-wheelers. And both these segments, according to JPMorgan, can benefit from better demand and valuations which are below or at par with their recent averages. Now they're also saying that poor monsoon is a threat to rural incomes, but this should be compensated by the policy support that could come in from the government side. Now in staple side, they're preferring ITC, HUL, Godrej Consumer, and when it comes to two-wheelers, they are preferring TVS and Bajaj Auto. And they are also saying that it's still premature to buy any mid-cap or low-end discretionary stocks, so they are advising investors to stick to large cap companies like the ITC, HUL, Godrej Consumer, TVS and Bajaj Auto.